you all the tradable data you need ahead of the open. Now, coming up, US stocks in focus. Wall Street set for a cautious start to the final week of the month, on pace for one of the strongest November gains on record. And it's Cyber Monday. Cost-conscious US consumers are nabbing early deals. And gold glistens, hitting a 6-month high on the Fed pause optimism. IG's Axel Rudolph joins us very soon to look at what the technical momentum indicators mean for the price of the precious metal. Now, good afternoon and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, let's just get a look at the indices for you. We're seeing quite a tepid start here, as you can see there. Not a surprise, really, as we start to see people come back from that long Thanksgiving weekend. The commentary from Fed policymakers later in the week also loom large. And if I show you a wider term look at this chart here, you can see that the rebound in equities in November has brought the both the Wall Street, and let's check on the S&P as well, because that has some very strong indicators. It's brought the US 500, as it's known on our platform, within 1% of its highest intraday level this year. Now, as I mentioned earlier, gold has been reaching new highs as well. For more on what's pushing up gold prices and what levels are next, IG's Axel Rudolph is here with more.
Angeline, yes, the gold price is really fascinating at the moment from a technical perspective, because on the weaker US dollar, you've had this upsurge in the price of gold since the mid-November lows around $1,932 per troy ounce. And now we are currently in the process of trading above our October highs at $2,009. And if we were to close above there today on a daily chart closing basis, for me, a technical buy signal will be given on a medium-term basis. And that could then take the gold price all the way back up again towards the highs seen back in 2020, 2022, and also 2023. And these highs came in between $2,070 per troy ounce and $2,082. So these would be the potential upside targets if we were to close above the October high at $2,009. And do so today or in the course of this week. And the odds are pretty high that this might actually happen, provided we stay above our October to November uptrend line, which so far can be seen around $1,978 per troy ounce.
Thanks very much, Axel. And as Axel rightly mentioned, the price of gold is very much linked to the dollar. The dollar easing against a basket of major currencies. Let's just check on the daily chart for you there. Down 0.2% and hovering around a 2-month low touched last week. When the dollar is softer, it makes gold less expensive for holders of other currencies. Now let's turn to the economic front, and we have quite a few US risk events in the coming days and weeks. We've got the core PCE price index. We also have Fed Chair Jerome Powell speaking later in the week, and of course those NFPs in the coming Friday next week. These are big tests to that thesis about how the Fed might be at the peak of its tightening, or this tightening cycle. Let's cross over to New York now, where Chris Vecchio joins us from Tasty Life, part of IG Group. Lots of things happening out there in the coming days and months, Chris. Which one do you think is going to move markets the most?
Well, this is a quiet first week after the holidays here in the United States. In fact, you could argue there's really nothing that's all that important over the coming days stateside here. Perhaps the most important event in the next few days itself will be the Chinese manufacturing PMI due out on Wednesday evening. Chinese economic data hasn't exactly been good, but it's certainly been less worse than anticipated. And seeing the PMI move back above 50 would be a welcome jolt in the arm from the world's second largest economy. Stimulus has been flowing there, of course, and there have been global concerns about recession. So if the United States is plowing ahead the way that it has been, China is starting to see a little bit of a rebound. You do have greater potential for more relief heading into the end of the year for associated assets like the Australian dollar, copper prices, even to an extent oil. But if you're looking for things here in the States, you have to look to Friday's speech from Fed Chair Jerome Powell. It's not that there's an absence of data otherwise alone, but anytime the Fed chair speaks, people listen. it stands to reason that he could actually take a little bit more of a hawkish tone, not promising another rate hike per se, but the whole idea that rates had risen enough between the September and the November Fed meetings such that the Fed could back off perhaps lays the groundwork for the Fed to say, we don't need to cut rates now moving forward because of how the bond market has moved since that November 1st Fed meeting. That's what I'll be watching this week. Otherwise, it is a quiet first week here after the Thanksgiving holiday.
And speaking of Thanksgiving, Chris, it's also a huge shopping time, and everyone tries to get some of those discounts in ahead of Christmas. What are you feeling on the ground there? Is there this consumption coming back, or do you think people are still very, very cost conscious?
Well, actually, I went to one of the local malls on Saturday with my wife and daughter so we could go to Build-A-Bear and get her a new stuffed animal. And I'll tell you, the mall was quite packed. Obviously, that's anecdata and doesn't mean anything at all. But it seemed like there were a lot of people out there with their young children doing holiday shopping. The data that we've seen from Adobe Analytics suggests that consumption trends are strong. On Thanksgiving, online sales were up 5.5% relative to last year. On Black Friday, they were up 5.7% relative to last year. Interestingly enough, the majority of shoppers say that they intend to do their shopping in person this holiday season, according to the National Retail Federation, NRF. The 74% of individuals anticipate doing their holiday shopping in person. So stronger online sales and also packed malls. That's a good sign for consumption this holiday season. Of course, American consumers are increasingly strapped. Credit card debt is moving up. Consumer delinquencies have been increasing as well. Maybe this is one final hurrah before Santa Claus comes, and then we see coal in our stockings in early 2024.
Thank you very much. Let's hope that's not too cynical, stockings. Thanks very much, Chris. We'll check in with you again in the coming week. Well, heavier online traffic and transactions could add up to a record $12 billion outlay by US shoppers this Cyber Monday. That's the early figure coming from Adobe Analytics, and it will represent a 5.4% rise from the same period last year. Vivek Pandya from Adobe Digital Insights says that strong discounts were seen, and we do know that many retailers like Walmart, like Amazon, started their discounts really early, trying to lure those consumers in to try and get their cashiers ringing whilst they still can. Amazon began its Cyber Monday deals as early as Saturday. We have anecdotal evidence as well that many others, including Walmart, slashed prices early, joining this trend of retailers discounting early on major shopping days to try and get those consumers, those cost-conscious consumers, to try and buy more early on. Now, sticking with retail, I just want to tell you a developing story. I can tell you that Amazon has reached an agreement with most of its workers in Spain on Monday. Now, this is to avoid a full walkout, so 1 hour strike per shift on one of its busiest online shopping days of the year. Just bringing up Amazon shares because it's all sessions on the IG platform. And this is the daily chart, and currently it is up about 8%. Around 20,000 warehouse and delivery workers at Amazon's Spanish unit have been urged to walk out for better pay and working conditions on the so-called Cyber Monday, when retailers aim to boost their Christmas gift buying with consumers. Now, no matter who you speak to, the general consensus is that the world is warming up, and this has an impact on retail stocks. Now, Weather Trends International, a weather tracking firm, says that 2023's autumn started off warm, and as a result, many major brands are already slashing prices to get rid of winter inventory like heavy knits, jumpers, coats. But don't take my word for it. Listen to those with skin in the game. H&M says that shoppers have put off heavy autumn clothing purchases. Costs also cut its online prices by 20% to shift warmer gear. And the ever-warming weather may be a negative for the likes of Walmart and Dick's Sporting Goods, because those retailers that have stocked up too much on cold weather gear like Walmart and Dick's, they might not be able to shift it in time for when the season starts moving into the spring season. So it's interesting to see how all this is changing for many retailers out there. It could be a positive, though, for Costco Wholesale and TJX as well, because they were able to adapt to seasonal change quicker. So where's the salad dressing? Well, if you're choosing retail stocks, no matter what time of the year it is, make sure you go for stocks and companies like Abercrombie's described as those having seasonless products, clothing you can wear and layer up no matter what the weather. Now, speaking of which, the COP28 kicks off this week in Dubai on Thursday, strangely enough, the same day when OPEC Plus is meant to have the delayed meeting online. Just checking in on global oil prices ahead of that, because I can tell you there has been some movement in WTI, and we are seeing that oil prices remain under pressure in the overnight session. That's a look at US crude there. Let's just have a look at Brent as well as we're on this. And as you can see there, there's a clear downward trend channel there if you look at my trend line. And if we don't see this breaking out of the 8540 level, and if volumes are maintained, we can see this moving ever closer down towards this level, which I can tell you is about 7580. Now, this delayed meeting of the OPEC Plus cartel later in the week is expected to confirm production cuts into the start of the new year. What will be interesting is if those cuts don't happen. Now, before we go, let's have a last look at how the markets, the equity markets, are doing. And we're seeing quite a cautious start to the trading day as people get back from their Thanksgiving festivities. Volumes likely to still be light. Well, that's it for this edition of Beat the Street. We'll keep an eye on all the retail data that will be trickling out throughout this session and the next as well. Until then, this is Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.